I'm going to warn both of you now. You're going to be an echo chamber because you don't like this tax bill, and you don't like it because of the way it treats small businesses. It's passed. I know you don't like it, but are you happy that it passed, in fact?
I am not happy that it passed because I think it was a wasted opportunity. This was supposed to be an opportunity for simplification. This was supposed to be an opportunity for growth. And this is very typical of what Congress does when they can actually get something done, is that they do a bad job, poor job executing, and then they pat themselves on the back for doing something. And unfortunately, Bill, I just have higher standards than that. I don't like the way that it's treating different states. I don't like the way that it's treating small businesses. I don't like the way that it's actually more complicated instead of less complicated. So if this is what everybody wants to be congratulated about, they need to get their congratulations from somebody other than me.
Carol, what do you think about, talk for a second about small business, because I'm under the impression that small businesses built America. Not only that, most small businesses seem to be, a lot of them started by women. And what foot up will they get in this process?
Well, you are correct. Small business is the backbone of the economy. Creates about half the jobs and more than half the sales. And we're seeing that the largest percentage of those job creators are actually service providers. Mm-hmm. There are a number of very complicated provisions in the bill, again, supposed to be simplifying, but complicated. But if you are a service provider in most industries, but of course they carve out a couple of them, but in most industries, you end up being penalized either if you make too much money or eventually if you grow your business, then all of a sudden you're not able to take advantage of the tax credit at all. And then there's also limitations to how much you're paying a W-2 employee. So for example, let's say you're a woman who's just hired your first employee and you're paying your first employee $40,000. Well, you can only get the benefit on 50% of that. So no matter how much you're making, you only get $20,000 of that deductibility benefit, which creates a disincentive for you to continue to add people. And again, it's just not a pro-growth type of scenario, which treats small business in a very different way.
Yeah, it is really interesting because, we keep being told, to follow along those lines, we keep being told we're in the gig economy. We're in the gig economy now, which I hate. Okay, I hate that phrase, but this bill is really bad to the gig economy because this bill says if you are somebody who is working as an independent contractor, this hits Hollywood particularly hard, but it also hits other independent contractors. You can't deduct expenses. For in the case of Hollywood, you can't deduct the cost of makeup. You can't deduct the cost of your agent, of your business manager, people that you need in the entertainment industry to do your business. Now suddenly those are all gone. You take that and the treatment of independent contractors with the things you were just talking about, Carol, and it's crazy.
And it's so inconsistent. With some of the service providers, they say that their labor income. Well, if your labor income, then you don't have to do things like buy workers' compensation insurance and put up an OSHA poster and pay 2 times the Social Security tax via a self-employment tax that treats you as a business and you have no guaranteed income. So make a decision and treat them one way or another, but they're getting the worst of both worlds. It's the backbone of the economy. I don't see how you can say that it's pro-growth when those are the people creating the jobs, and now you're creating that disincentive.